If I can show you how to recycle money just like banks do, you could create wealth just like major corporations like Disney and McDonald's, and also like wealthy presidential families like the Kennedys and the Reagans. Stay tuned in this video and you'll learn how. For the best information on the infinite banking concept, becoming your own bank, savings with a tax-free retirement account, subscribe to my channel and click the bell so that way you'll be notified whenever I upload new videos every week. And if this provided value to you, don't forget to like and share this with anyone else that would benefit. In this video, you're going to learn how banks recycle money to create wealth. Major companies like McDonald's, Walt Disney, General Electric, as well as many others, utilize these principles to store money until they're ready to be spent or till it's ready to be invested. Wealthy presidents and presidential families have also used these principles. Former U.S. Senator John McCain actually used this as a means to fund his presidential campaign. Now, you don't have to be wealthy in order to get started. You can get started with where you are today. A common misconception that many people have is they can't start their own bank or be like a bank unless they're already wealthy. Well, it's contrary to that belief. Most people and you also can get started even if you're in major debt. As a matter of fact, many people utilize the banking system in their lives to get out of debt, to pay off credit cards, to pay off their mortgage, student loans, vehicle payments, and any other debt they have, to create a way. And the reason why they do it is they know that banks do it every day. Hi, my name is Mike Hero Hieronymus, and I'm the founder of Infinite Family Banking. I'm not the founder or the creator of these concepts or principles because banking is actually a system that's been around for over 100 years by utilizing high cash value, low commissioned insurance policies. These aren't using indexed universal life or any other life insurance products that are term with return of premium. These are only being utilized in the proven system of using a permanent whole life insurance, guaranteed rates of return that compound tax-free. This way, when those mutual insurance companies pay the dividends, it's over and above their guaranteed rate of return. So let's start off with talking about how do banks recycle money and where did this get started? Well, I know that when I was young, watching the cowboy movies and westerns, that when the robbers came and robbed the bank, or the gold prospectors or the people in the town came and deposited their money in the bank, it was behind these big iron doors and bars. Well, you and I both know that if you went down to your local bank and deposited money, they don't take that money and go back and lock it in the safe. So a week later, you come back with that deposit slip or piece of paper and get that same bag of money or that same bag of cash. Banks don't work that way, and they haven't for decades. How banks work today is what they call fractional lending. Fractional lending is a concept where if you went down to the local bank and you deposited $1,000, let's say, the bank is only required to have on reserve 10% of that money they came in that they lend out. The Federal Reserve will loan that bank up to 90% or $900. We all know that when the Great Depression happened and people rushed into the banks to remove their money, that a lot of those people left without cash. The reason why is the banks don't actually hold all of our money. So when a bank loans money, 90% of the money they're loaning out, they don't actually even have. Now, once you make payments on your car or your mortgage, they receive that money. And again, the process starts all over. They only have to hold 10% of that money and can loan out another 90%. So all the money that's coming in, again, is only being held at another 10% of that amount. So banks continue to recycle or do this process over and over and over again. You might ask yourself, where do banks store and hold their money if it's not locked up in the safe or in the back room? Wells Fargo has twice as much in whole life insurance policies than they do in all of their bank locations combined, with $19.3 billion. Bank of America has more in whole life insurance policies than what they spent building over 5,000 branch locations all across the United States with a whopping 18.5 billion. Now that's a billion with a B. Now we also have JP Morgan Chase Bank at 9.8 billion in Citibank at 4.5 billion. So the four largest banks in the United States use whole life insurance policies as a storage facility to hold their money. It makes absolutely no business sense for a company to have money sitting behind a vault or behind closed doors in a cage that earns nothing. It's earning you zero. So this is why Robert Kiyosaki goes insane and he says it is stupid to save money. What he was referring to is putting money into a bank that's paying you next to nothing. Banks don't keep their money in a bank. Banks put their money into something that gives them cash flow, that gives them a return, gives them something that is a guarantee and it's not a risk. So when you put your money into a whole life insurance policy with a mutual insurance company with guaranteed rates of return that pay plus dividends, you're doing what banks do. So it's funny for me to think that a bank doesn't store their money in a bank. Consider that the average American makes over $2 million in his or her lifetime. So where are you keeping all of your money between when you're making your car payment, making your mortgage payment, paying for groceries, saving for a vacation, spending money to go out to the movies? Where is all of this cash flowing? Is your monthly cash flow of that $2 million that you'll see in your lifetime flowing through somebody else's bank, or is it going through your bank? When you flow your money of your expenses and your income and you run it through your own banking policy, while it's not being spent on bills, while it's sitting there waiting for you to make that next investment, it's gaining compound interest guaranteed. Now, the more money that you have in cash value that you put in your banking system, and the longer period of time that you have it to use, obviously the more money that you're going to have in gained interest. Ironically, the more money that somebody has that they're in debt, or the more lines of debt that they have, it's surprising how that also accelerates how quickly they not only get out of debt, if you're using this as a get out of debt strategy, but it's also amazing how the math works on how often you borrow or use that money and pay yourself back, because you're always gaining compound interest. A whole life insurance company through mutual carriers that I personally work with are all over 100 years old, and some of them even around the era of the Civil War. So all of these mutual insurance companies have found ways to be profitable. Every single depression, through the dot-com bust, through the mortgage crisis, and still been able to pay dividends over and above all of the guaranteed rates of interest, which is typically 4%. If it makes good business sense for a bank to store its money until it's being used or while it's being used as savings, doesn't it make sense that you should and you could benefit from it as well? Well, you can. Click the link below for parts 2 and 3 on how banks recycle money and why you should too. If you haven't already, like, share, subscribe, and don't forget to ring the bell so that way you'll be notified when I upload new videos every week.